in this presentation, please throw something in the chat. We can be more than happy to see if we can answer it during the process. At the end, we'll get some information. We'll have some questions and answering as well. So you have a second time to ask some questions. All right, I guess we'll go and get started. Hey, everyone, thank you for joining the webinar. I'm Josh Wren, CEO and founder of Accelerate. With me, I have Dawar, Alimi, founder and CEO of LenderPrice, and Christy, Soukhamneut, SVP of Mortgage Finance from Texas Capital Bank. I'm excited to have both Dawar and Christy on here. The idea is we're going to be talking about the IMB from last week, but really it's going to be a conversation, that is what the general conversation the mortgage industry is having right now, and kind of understanding what that looks like, and what exactly lenders are looking at for the future, and how you lenders on the phone here or on the webinar can what's some information you can take away from this. So with that, I think I'm going to go ahead and Christy, we had kind of discussed beforehand some of the takeaways you had from the show, and just kind of your general impression of what you saw at the show, or what the sentiment was from lenders as far as what was the hot topics or anything that you picked up on that you thought would be important to share.
Yeah, Josh, it was great to see everybody out in San Diego and see people out, lenders especially, really focused on what they can do to create value in this market. There's a lot of conversation around, obviously technology and how it can improve the workflow that folks have. There's also a lot of conversation around what are the right cuts to make, not just in terms of people, because everybody wanted to save as many people as possible. They wanted to have as many people on their payroll. So where could they save money that wouldn't have this negative impact? Because companies are looking to survive. They're really looking to thrive. They're looking at every aspect of their business. One of the most highly attended sessions that I heard a lot about was on the repurchases from the agencies. What kind of repurchases are they seeing? Are they seeing the indemnification versus the total having to buy it back? There was a lot of conversation around that when you were sitting out on the deck after the sessions.
Yeah, no, the agency topic, I think that's actually, as you said that, I'm like, well, that's actually a really interesting topic, because by and large, I've been in the mortgage industry for 24 years. And I remember after 2008, this question of, what were the agencies going to do? And basically it was, at the time, it was, oh, you lender was the credit insurance. And, even though we gave you an approved eligible loan and said you don't need to qualify them by income, we think that you did a bad job, buy the loan back. And obviously loans have been performing really well. And, HARP came out, that was lowered indemnifications and helped, relieve lenders of, liability. But it is interesting now that maybe if there is a headwind in the mortgage market, if we do have some foreclosures coming up, or if we have delinquencies coming up, the agencies and what they'll be doing, how they handle that will be interesting. I think we'll watch this year. That's
absolutely new. I think there was some great conversations around technology, which I'm sure interests many of the people that are joining us for the webinar today, and around the return on investment. And how do you calculate that? How do you put everything into place so that you make sure that the money that you're investing in technology actually provides the return that you're hoping for? It increases the efficiency, or it draws in new business. Like, what are the key things to put in place? I heard a lot of folks talking about that.
Yeah. And Dawar, I kind of asked you the same question, and just, your summary from the show, what are you hearing? And just in general this year, what are you hearing in the marketplace?
Yeah, I think that from a vendor perspective, I think lenders are really analyzing their tech stack, figuring out what components of that tech stack do they need, what parts can they actually get on the vendor market, and get some efficiencies, and what is that overall cost? The other thing that we're noticing is that I think that because cost is such a huge factor this year, they're actually evaluating the cost that it takes to actually manage and maintain their own internal systems that they've built versus what's out there. And then, can I get better technology if I were to buy versus continually manage and maintain the proprietary system that I have today?
Yeah. I mean, I think that's a great topic we could probably kind of go into a little bit more around, is that, I think what I saw and what I kind of took from the show, which is makes sense. Everyone's understanding cost containment. How can we control our costs? How can we become more efficient? And, my take on it has been, some lenders that we're seeing that are, we have lenders that are growing right now. They're the ones that are really aggressively going after their technology and how they originate loans differently than what they've done in the past. Right. So 2-3 years ago, when we went this refinance boom, everyone's using the same technology workflows that they've always been using. And so we just threw more bodies at the problem. And it was about, how do you get more out of your people? How do you hire better, smarter, faster people?
Yeah.
And I think that's changing right now. And I think the technology part of it is where that's going to change, is because, it's not about hiring more, better, faster people. It's about having better technology, making your people super efficient. Or how do you get more out of each individual by making them more efficient? And, technology is the way to do it. We've been training all the training in the mortgage industry as much as you can get. We're at the zenith of that. No one's going to teach you any. There's no more better training out there. There's no more better processes, human processes out there. Now it's coming down to, the technology. And, Christy, you said it earlier today when we were talking, and, Dawar, to your point, that what's the cost to own versus build and ROI. And, I think, Christy, you gave me a number that lenders spend 4% on technology. 4%.
It was an interesting slide from the session, one of the sessions that we were in, where they talked about how lenders are spending the money that roughly $10,000 in revenue they get on a loan for the $11,000 in cost that they actually have, right? So it's a roughly a $600 loss per file with the Q3 numbers. I'm interested in seeing Q4 numbers from MBA. But of that number, 68% was spent on headcount, right? So your LO commissions and your operational staff. And that's roughly a 50-50 split, by the way. That 68%, half of it is your operational team, half of it is your sales commission. But then 4% is what is spent on technology. And lenders are asking a lot of that 4% that they're investing right now.
Yeah, that is actually.
Well, what's interesting is that they're if it's 4%, what's happening right now, because cost is such a huge factor, they're going back to vendors and saying, "Hey, look, can you help me out?" We're seeing a lot of that. I think one of the other things too is that we're in a cyclical industry, right? So it goes through cycles, but that also happens when it comes to the evolution of technology as well. There's a changing of the guard ever so often. If you look at every single solution out there, at one point you had this one solution, you could name them, and it was the most widely used solution at the time. And then eventually it changed. And I think that, although we're probably in an industry that's very slow to change, I think that this time around, with the investment in a lot of startups that's been happening in the last 5 to 6 years, I think that we are slowly seeing lenders look at ways to make certain things much more efficient. On our side is, how can I take advantage of introducing a loan product as fast as possible in the marketplace and make it really easy? And I'm sure there's a lot of examples out there, but I do think that this time around, especially this year, if you're a lender, if you're going to look at something, well, because volume's down, and when volume's high, you don't want to change technologies, right? Because you're like, you don't want to disrupt the system. This is the time to really look at it and see if it makes sense. If it doesn't make sense, it doesn't make sense. But if it does make sense, this is the time to actually embrace that change.
I'm hearing a little bit of the chicken and the egg in this cycle, and we hear it in every cycle, that when volumes are high, you're too busy to make any changes. But when volumes are low, you don't have the revenue to make any changes. And maybe you don't have the bodies, right? Cut your staff. So there's never a good time to do it. And to your point, Dawar, I think we're seeing people that have started to look at this and say, you know what, we've got to make some changes, because we don't want to go through these boom and bust cycles. And not that we don't want the increased volume, but what we don't want to have to do is hire and fire. Right? Yeah. We're tired of this cycle. We're tired of what it does emotionally to our staff, to ourselves. And we want to do better and be better and still be able to serve borrowers in a meaningful way. And that's where I'm starting to hear a lot of the conversation around tech and efficiency is, help me make my people more efficient, so that I can keep the staff that I have. My core group, it's good. We can move up and down, obviously within certain range limits. when volume changes and when we see that happen, the other really key piece that I've heard over and over again is I want my tech to work together. I want my vendors to be partners with each other.
Yeah.
Are you hearing the same things?
Yeah, we are. Can I just add one thing? We're also an industry that makes it very difficult when it comes to vendors. There's, if you look at some of the largest, there's this rev share component within our industry that I personally, when I first got in, when we founded Lenderprice, I was like, why should vendors charge each other? They should be working together, keep the cost down, because when you start having rev shares, that increases the cost. Make it so that we're all integrated. So that way that at the end of the day, whether the lender that chooses our solution has a much more cost-effective solution versus something that's bloated because we've got all these rev shares going around. A lot of people don't know that, but it happens.
Yeah.
I got to say, I can't opine on that, but.
To Dawar's point, you see it in your costs. Maybe you don't realize it, but you may have a vendor or two that is increasing the cost of the other vendors you're paying. Right. So you may not see vendor X is charging you this much money, but vendor Y has to charge you an extra whatever it is because vendor X is charging them. So I do agree, that that's just unfortunately where the market is right now and where we're at. But I think what you said about tech working together and then also, I think of people not wanting to let people go and become more efficient. I think, the solution to that is what we see is making your people more efficient, right? Which was what we're saying, but how do you make your people more efficient? That's really the question, right? We've been talking about this for years, making your people more efficient, but I think what you said, Christy, was onto it, which is the technology needs to work together. Because I can sit down, I was a lender for years. I was a loan officer originally, and I trained thousands of loan officers. I've been in this industry for quite some time. And if I sit down and go to the average lender and ask their loan officer to price a loan for me, and I sit down, I bet you I'm going to watch them go through 2 or 3 systems. They're going to start with the CRM, then they're going to go into an LS, then they're going to do pricing, then they're going to have to get some disclosures. There's a lot of different stuff they have to work through that makes it more difficult. So I think, if you could, when we would train new loan officers, we had a month-long training program. I can tell you 80% of the training had nothing to do with sales or how to help someone. It was just, how can you get disclosures and loan in the process? And that's all it was. We couldn't train on how to find the best we did as much as we can, but it was really about how do you get DU to say yes? How do you, all these different little, you got to refer eligible. What does that mean? How do you fix this little problem? And I think as we see technology working, faster, better together, your average loan officer will do more. So what that can do is this. And, when I was a lender, we would do this as a study. We would figure out ways to use technology, increase efficiencies. We would then also cut pay plans to our staff because we had to pay for the technology. But in reality, it never cut anyone's pay plan. Everyone always made more money, right? So you can pay less per loan if you can double the amount of loans someone can do with the same amount of effort. Right. In process and operations, you can pay less per loan if you can double, you get the drift of it. It's using technology. So, I know Dawar, Lenderprice, one of the things that you guys do really well is the pricing piece of it. How do you see that is helping lenders kind of get better to, more clarity on pricing and faster to an answer?
Yeah. I've always, most users just see a pricing engine on the front end and they just kind of see it and they say, okay, you got to fill in these inputs and price. But the power of the application for us is really our back end. Is rather than using control flow logic, if then statements, what if you could just type out the rule in just a natural sentence and the system will actually pick up keywords and create those rules for you? It's various, automation, functionalities that we focused on. Automation.
We go back, because I know this about your system.
Yeah.
And I think maybe so that people are listening to it, I think it's actually really unique. You're the only people so far in the industry that are doing this. We're going to copy you. I think I told you.
Yeah.
Explain this, because you're right. When it comes to creating pricing engine rules and stuff, it can be, you need a programmer. You need someone who's really good at math to understand these if-then statements. And you guys have simplified that to create.
Well, if you look at the mortgage industry in as whole, it's just a bunch of patterns. Underwriters underwrite loans based on conditions. Based on, hey, this is what you're supposed to do, right? There's a pattern there. For us, when it came to rules, we noticed that whether it's an LLPA or a margin or or an eligibility rule. So there's certain keywords that are really important that that you can actually use to create a rule. So we noticed that people with fat finger, less than or greater than signs, or they would get it mixed up in their head. It's math. Yeah. So then what we said is okay, what if we use NLP, grab certain keywords, and then create the rule for them? So if they type loan amount greater than 100,000-400,000, it'll create the rule. It'll look and see, okay, loan amount, that's a key word. Greater than, okay, they know that that's going to be greater than, or loan amount in between. So it picks up the word between and it creates the rule for you. And that speeds up actually us loading new investors in our system. When we first started, we hired a barista from Starbucks. It was just the three of us, just me, Kun Kao, Lee Ku, my co-founder, and this person. She loaded and completely completed every single program, guideline, etc., for 50 lenders in under a month because of that. So it's those little things that you can do to make it efficient. The other thing too is there's this book called Don't Make Me Think. The best solutions out there are the ones, and this is what the book is all about, are the ones that you could go in and out, right? Sometimes a simple white website that just doesn't have anything, if you look at like Warren Buffett's website, is just perfect because you could go in and out without getting lost. And I think applications, the newer applications like Accelerate and others that are modern, are making user experience something that's very important, not only for the front end, the back end, and everywhere in between. How can we, even on the coding side, what can we do so that when we hire a new engineer, they can understand the pattern that it takes or the various design structures to get them up and running faster and use a certain framework. So anything that we can actually make things better and easier is going to get lenders to look at us and say, that's what I need. If it took 5 individuals to do, and now I've got to downsize and I only have 1 individual, well, I got to make sure that my exposure to risk is low. So I better have a solution that covers all the other things that I had the other 4 people doing.
Those are some excellent points. I think you've glossed over the NLP, and I don't know that everybody that's listening today knows what NLP is.
Well, they do. Well, they do.
Right, do they even know what it is?
ChatGPT.
Right, natural language processing, and I think I can remember sitting in meetings and people talking about different terms, and you don't want to be the person in the room that raises your hand. It's like, what does that mean? I think everybody else knows what it is, and I'm not sure that everybody. You did a great job of explaining how it worked. And it reminds me of Google, right? I don't have to put in exactly what I'm searching for. Google kind of understands what I'm looking for. And to be able to have that on our side in our back-end processes is huge. We've made some significant advances from when I first started looking at tech for the companies that I've worked for to where we are today. And I don't want people to miss that piece with how important it is that we've made these changes and that we're more focused on the customer experience than we've ever been in ways that aren't damaging. Sometimes we've implemented tech that makes it easier for our customer, and then we forgot about our internal customer and it made it harder for them. And today we're focused on both, right? We're focused on not only our external customer, the borrower, who's obviously extremely important, but we're focused on that internal customer and making their job in life easier. It's not to the exclusion of one or the other. And in times past, I've implemented tech, I hate to say it, that made it harder on our internal systems.
Yeah. No, I definitely, I can, what you just said was the internal customer and external customer. That's a great point, Christy, because for a handful of years, it was about, and it always can be customer experience, because it was about how do you improve a customer experience? Like it's POS, how can someone do a loan online, upload their documents, make that easier? But I mean, the back office, Christy, how much innovation have you seen in operations, underwriting, shipping, fulfillment, post-close QC in the last 10 years, 20 years? I mean, has it changed much in your world?
Has anybody ever talked about how long it took us to get e-notes and e-close? I mean, we worked on that for 20 years. I mean, it's like, I think a lot of people don't realize that because they're newer to the industry, but we've been working on this for a long, long time. And it took a pandemic to really push us forward and unite the states and the industry around what we had to do. So innovation on the backside can often take a really long time. And we have been focused almost singularly on the borrower experience, which is absolutely necessary, right? Borrowers are demanding more and more. They're used to the Amazon shopping. I mean, Amazon notice popped up on my phone a little while ago that whatever it is one of my kids ordered is 6 stops away. And people get used to that level of communication and that experience, and we've got to provide it. We also have to provide it on the back end. We can't, I mean, Josh, you talked about it earlier. We can't just throw bodies at things anymore. We have to really think about what we're doing. And that goes back to, the IMB sessions where people are focused on really making change improvements that make them, I call it fierce, right? It makes them more fierce. It gives them this strategy that they go to market with. And it means that they can talk about how they are actually different, both internally and externally, how they're serving the borrower, how they're making the loan officer or their operational staff more productive. Because if I'm an ops person today and I'm looking at going to a company, yes, I'm going to be really excited that there's an opportunity to interview and take a new job if I don't have one. But I also want to make sure that that company is going to be able to keep me. And I'm going to be asking some of those tough questions about what you're doing so that in the capacity seasons, my job is more stable. And I think it's great questions for all of us to ask. And it's incumbent on us as leaders to make sure that we're implementing these things and asking these questions when we look at tech, when we look at systems and processes, and everything that we do, we just want to be better. We need to be better.
Yeah, and I think that's a great point, which is we need to look at, and I think as loan officers, if you, to your point, if you're looking at a new place or if you're looking at these organizations, you should understand what's the vision of the leadership and are they tech forward? I mean, I can just tell you, and Dawar may echo this, but over the last 10 years, as I went out in the market selling software, there was a handful of lenders that I met with, and the owner was 67 5 years ago, and he just goes, Josh, I'm actually really making a lot of money right now. I'm going to retire in 3 or 4 years, and I don't really need to do anything. If I change new software, I'm sure it can make me a better company and make me more efficient, make me more money, but I'm not going to be here long enough. I don't really care. So I'm just going to keep using what we're using and let my guys make money. And when I retire, maybe they'll buy me out. Maybe who knows what will happen. It kind of was the philosophy. And it's kind of like, wow, if you're working at a lender that has that philosophy, you might really think about where the market's going to be in the future, because that's going to be tough to compete. The next time we have a refinance boom, technology-driven lenders are going to be the ones that absolutely dominate. It's not going to be lenders who have $11,000 cost to produce a loan are going to be the ones that win the game. It's going to be lenders who have a $2,000 cost to produce a loan or $3,000 cost to produce a loan. That's only going to be through new technology, right? It's a new lens of looking at, a new way of looking at things versus just trying to do more. Henry Ford said it, if we listen to the customers, they wanted faster horses, right? No one wanted a car. They wanted faster horses. So it's about understanding that it's not about more of the same thing. It's about something new and different. And, how do you look for leaders like that?
I think you absolutely have to talk to the leadership and understand what their strategy is and how they make decisions. Over the years, when I've looked at loan officers that have made choices or changes, you see some that make really good choices and they move to one and they stay. And you see others that bounce around 3 or 4 times. And my experience has been, and this is obviously a little anecdotal, not statistical, but it's that they've looked at one pain point and they've gone, I've got this pain point at my company. I need to go find something that fixes that. And that's what they go and they look at. They don't ask the deep questions around, are the things that are really good at my company really good at this other place? And how are they going to make decisions in the future? Because if you don't understand their mindset, their strategic planning, and today, if you don't understand their corporate cash, do they have the staying power? You don't know what you're really getting into. And so it's really incumbent on folks who are looking at new roles, new companies, even looking at their existing companies, to ask some of these tough questions that maybe they weren't privy to before.
Yeah, that's a great point. Dawar, what any advice around that too? Because I know you and I talk about, what is, and like you mentioned NLP. So for those who are listening, don't know, it's natural language processing is what NLP stands for. And it's part of what makes up AI, right? So it's a NLP, machine learning is two of the parts. There's a third part, but those are how you make up, quote unquote AI. But, with that, in the technology, Dawar, we've talked about some of the questions people should be asking, or what's the terminology? What do you think about looking at new technology? What are the questions that lenders should be asking their vendors, and should also, should loan officers or executives be wondering themselves about the company they're at? Like, what's the technology stuff that is, new?
Yeah, I think that one is, really doing a thorough analysis and, not, like identifying all your pain points and making sure that as part of the demo that those things are covered. Because sometimes if you don't address those things, you might go through a demo and just not, just might like the application, but it doesn't really solve certain problems that you have. I think that, so, making sure that you have all the right questions. What we normally see is a lot of the larger banks and lenders, they do a thorough job in asking the vendor all the appropriate questions, where the smaller lenders don't. And I think they should. Whether a company is new or has been proven, that's important. You definitely want to check have references, ask for references, make sure that they can provide you strong reference, and then look at the track history. Look at which lenders are using them. Are they similar to you? Are they successful? Why did they switch? Those are all important questions that, that need to consider and ask, just to make sure that you're actually making the right decision and actually moving to a new vendor.
What I would tell you is make sure you have the right people at the table to ask questions.
Oh, absolutely.
A lot of times we leave out stakeholders or I don't want to say we. A lot of times stakeholders get left out in these meetings, and those questions don't get asked. You need your partner from compliance and your partner from risk, and you need a loan officer, and you need a processor, and you need an LOA. And, you've got to set up some parameters, but if you're not getting all those perspectives, you might make the wrong choice.
Yeah, absolutely.
That's a great point, Christy. Because when we have people, new prospects and lenders that come on board, if enough of their stakeholders aren't in the initial process, we find that there can be trouble down the line. We get into, rolling someone out, and they make a statement like, "Oh, I want a green button. It can't be blue." And it's like, well, we could have addressed that 2 months ago and made it blue for you, but no one's told us you wanted it blue versus green. So now here we are. We can fix it, but now it's going to take time, and someone gets upset. And it was really, to your point, Christy, they just left that stakeholder out. They didn't understand. Right. So here's what I would use for you lenders out there. The term I would use is use case. So if you're looking at new technology and you want to improve something, come up with your use case, which means, how do you intend on using the system? I want to go in, do this, then do this, then do this, and I want to get that. Write that out. And then when you talk to your vendors, say, hey, how would I automatically update my real estate agents when a loan gets approved? Show me how that happened. Whatever the use case is, or how do I do data mining? If I want to know what real estate agents are giving me the most business, this, obviously this is for our tech. How would I do that? If I want to, ask those questions, Dawar, if I want to create a new program, you're a lender, I want to create a new program, pricing program. Hey, Dawar team, show me how I would do that. And then, that's really, I think, the way people need to do it. It's not about, I see people look at technology, and if the colors look newer and the boxes look cooler, they get really excited.
Or the worst is like what happens in our industry is like when the more that VCs pour into one certain, company, then it's all of a sudden it's like, oh, I mean, you and I, Josh, we know on the, private equity VC side, it's not what you think.
That's right.
Raising a ton of money just doesn't mean that you're going to be successful.
Yeah, that's true. Yeah, it just means that you have to spend a lot of money in sales and marketing is usually what it means. Yeah. Convincing people to buy your product and not necessarily building the product out, right? Yeah. Christy, I know we're coming up on, actually, we said we're going to do 20 minutes. It's 30 minutes. So I know I wanted to be respectful of everyone's time here. And any of the participants, you guys have any questions, please feel free to throw them into the chat box. But before we go, I just wanted to see, Christy, if there's any, I really liked your idea of understanding the leadership of what the companies are doing, understanding having technology work closer together. I think that's really important. I think lenders really need to be focused on that. Is there any other things that you want to, you could summarize, leave the group with?
Such a challenging question. Focus on what you can control. There are a lot of things in our market that you're not able to control, but what you can control is your attitude and your activities. And that's going to make the difference, because those people who get off their behinds and get out into the market, and this can be a tech vendor, this can be a loan officer, this can be leadership, whoever it is, you need to be out doing things. And in some cases, it doesn't even matter what the things are that you're doing. Just the fact that you're out is going to make a difference. Now, I suggest you have a strategy and you go out and you do impactful things, but focus on what you can control and still be out there and be visible, be educating folks. People want to hear from you. They don't want to see you hiding with your head stuck in the sand.
Yeah, I think that's a great point. I definitely see in this marketplace, you do have to be visible. That's a big part, especially if you're in leadership, right? People want to know if the leader's sticking their head in the sand, then they, what should they do, right? They want to know people, I think go out and do something. I always tell people, when you can't do anything, the thing's not working for you, just do something, anything helpful you can do for yourself for the day. Sometimes for me, there's been times, back in 2012, when I had to buy back $70 million in loans, one day I realized, oh crap, this really sucks. I had sat in my office, like, what am I going to do? I cleaned my office for an hour, sat there, and I just like, you know what? I don't know. I can't do anything. I'm going to clean my office. I cleaned my office. By the end of the hour, I had a plan of what I could do, because I felt good. I was actually doing something productive. My office got clean. So I was thinking of things. Then I came up with a plan of how I could, what I needed to do next. So those are all things. Do something positive, right?
Absolutely.
And Dawar, for you, any last thoughts before we...
I think, this year for all the folks that are on this webinar is to treat this year as a year of opportunity. Because if you're a company out there, whether you're a lender, vendor, whoever, be positive and understand that there's a lot of interesting things that you can do in this market that you may not have, that you may not be thinking about that you should do. But most importantly, if you talk to a lot of the, I was talking to, Glenn Stearns the other day, and, he mentioned that this is very similar in the sense that when he was at Stearns at the time, it was very similar. It was a down market, and he decided to double down. Now, some of you may not have the financial means to double down. There's other ways that you could actually, end this year as a success. But definitely look forward and be positive, because I'm sure there's got to be things that you can do that can drive your company forward and allow it to actually be, who knows, maybe the contender in your space.
Yeah, it's a great point. Stearns, it's a great example. They grew out of the market meltdown. That's where they had Quicken, same thing. So you can actually look at some large lenders that have had tremendous success over the last 10, 15 years. And they came out of a time like this, which when it was, it was more difficult. And I think that, for all those lenders out there, if you guys really look at that, now's the time, chicken and the egg, right? But now is the time to actually put the work into to improve the process and make things more efficient, and then gain your ROI, right? You'll start seeing the ROI. All right, everyone that is on here, I really appreciate you guys all joining. Obviously Dawar and myself, we sell software, so we would love to have you come check out what we do. If you have any questions, I'm sure you can go to Lenderprice's website and ask for a demo. If you have any questions from Accelerate, come to our website. And then Christy, thank you for joining us. And I know you guys also provide some banking facilities and different products for lenders as well. So I'm sure they could reach out to you for that.
Absolutely. We appreciate your having us on today. This was a good conversation.
Awesome.
Yep, thank you.
Everyone have a great week.
All right. Talk to you soon. Bye-bye. Bye.